Indiabulls belongs to the housing finance sector. See, there are a lot of companies. HDFC is the biggest company in the sector. And next one is LIC Housing Finance Limited. And the third one is Indiabulls Housing Finance Limited. So Indiabulls Housing Finance Limited is the third largest housing finance company by total assets. It is also the third largest housing finance company by sales. அதுவும் இல்லாமல் அதோட பேலன்ஸ் ஷீட்டில் பார்த்தா there are a lot of cash. 15% of its total assets is cash and bank balance. When compared to the other housing finance companies, Indiabulls Housing Finance holds a lot of cash in its balance sheet. It was actually part of Nifty 50 for a brief period of time, but the company got replaced by Nestle in 2019. Same time, the stock price on the drastic reduced on the period. That was due to the DFHL crisis, ILFS crisis. When the banks stopped lending to NBFCs. Moreover, the Indiabulls Housing Finance balance sheet, there were a lot of wholesale loans. Wholesale loans, they are given to real estate developers. They develop the buildings and then sell it to the customers. There's got a lot of risk in that business. So real estate demand reduced. They were not able to sell whatever they built, due to which they were not able to pay back their debt to the NBFCs and also to the banks. Banks stopped lending to NBFCs. They banned the commercial papers because a lot of NBFCs were actually borrowing short and lending long. So due to which there were a lot of asset liability mismatches in the books of NBFCs. So this actually impacted Indiabulls Housing Finance also. The valuation about its price to earnings ratio is 5.5. It's very less than the mean PE, which is 9.5. The price to book ratio less than 0.5. The dividend yield is 5.6. The return on equity it's 7.5, and its return on assets is 1.23. So it is actually targeting to reduce its wholesale loans by 33% by March 2022. So they are going to do it. They are actually going to establish alternate investment fund. So the Indiabulls Housing Finance is going to actually invest 10%, and some external investors will be investing 90% of the funds. So on the funds they will give it to the developers, real estate developers, or they as well buy the assets and then develop the properties and sell it to the customers. Result of this will be it will reduce the wholesale loan in the balance sheet of Indiabulls Housing Finance. So there were a lot of real estate developers who actually defaulted on their loans. Banks stopped lending to NBFCs. Therefore, Indiabulls Housing Finance they sold down a lot of their loans and they reduced their assets in the balance sheet. So by doing that, they actually generated a lot of cash. So the net debt position drastically reduced from more than 6 some years ago to actually 2.8x. Recently, Indiabulls Housing Finance Limited established a scalable asset-light model for the retail loans. As per that, it will co-lend loans to its customers along with the partner institutions. So 20% of the loan will be in the books of Indiabulls Housing Finance Limited, and 80% of the loans will be in the book of the partner banks. Wholesale loan it's 35% of the total assets. So with the housing finance loans and SME and business loans. So in the wholesale loans, they are trying to reduce by 33% by March 22. So thereby they will actually de-risk their balance sheet. If you see the shareholding pattern of the company, the DIs, the domestic institutional investors, they have increased their stake in the company. The promoters, they are selling, and they are going to actually non-promoterize the company. So at the end of this financial year, there will be no promoters. So it will be run as a promoterless company. Things are actually starting to look up for Indiabulls Housing Finance Company, but only time will tell whether it will actually regain its lost glory.